What does it mean when we say common control for associated companies? Let's take a look at some examples today. Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Associated companies are really becoming a big thing in our tax rules now. And if you have more than one company, then it can be quite materially impactful on the tax that you are potentially going to be paying. So on that basis, today we're going to look at under common control and how that actually fits together to make sure that hopefully we can look at some examples and really see how that it may impact you and your businesses to ensure that you know whether you are associated or whether you are not. Let's jump into some examples. Today we're looking at common control. So let's look at example 1, where we've got company A, B, C and D, a couple of different ones, who have all got different owners. So we're going to have a look at each of the companies to see which ones are going to be associated with each other. And based on under common control, I'm going to get first of all my blue so that we can go through and see who has got control. Now, in company A, that's owned by Mr. Bloggs at 80% and Mrs. Bloggs at 20%. So on that basis, Mr. Bloggs is our person who has the majority control. Now in company B, we have got this owned by Mr. Bloggs at 70%. Miss Bloggs and Master Bloggs both have 15%. So in this one, our company is the majority owner is Mr. Bloggs. Now company C, we've got 50-50 between Mr. and Mrs. Bloggs. So on that basis, there is no control in that one because it's owned by them equally. Now let's look at the final company in company D, and this one again is owned by Miss Bloggs and Master Bloggs, who are 50-50. So on that basis, we have again got no control because we need both of them to be involved to be in control. So on that basis, they are not under common control. So for our example here with company ABCD, we've actually got two that are associated to each other. So we've got company A, which is the first associated, and company B, which is the second associated. So company A will have two associated companies when doing the tax calculations, and company B will have two associated companies because they are both connected there. Company C, based on the fact we've got no interdependence because we're not covering that in this session, and company D, they will have no associated companies. Now, the impact of having an associated company means our tax limits, which are normally 50,000 and 250,000, will be divided by the number of associates, so divided by 2. So each of those companies will have the first 25,000 at the 19%, the middle bit at the marginal tax rate, and the top one at 125,000 will go up to 25%. So the impact for these two companies is that there will be a lower tax threshold before they go up to the next tax bracket. Let's move on to example 2 then, and this time we have got 3 companies. We've got company A, we've got company B, and we've got company C. We're sticking with the Bloggs family at this point in time, and we've got Mr. Bloggs who owns company A with 60%, and Miss Bloggs that owns company A with 40%. So on this one, we have Mr. Bloggs, who is a person who controls that company. Company B, we have owned by Mrs. Bloggs, who has 30%, and Miss Bloggs, who has 70%. So the owner of this company is going to be Miss Bloggs at 70%. And company C is owned by Miss Bloggs at 51% and her husband at 49%. So the controlling party here is 51%, who is in control of the company. So from company A's perspective, we have potentially no associated companies because Mr. Bloggs is not the controller of any of the other companies. So this one we have no associated companies. Now for company B, we have a different story because although one is with Mrs. Bloggs and company C is with her husband, Miss Bloggs is the controlling party in both companies. So on that basis, company B has two associated companies. Now, if we look at company C now, company C, in a similar sort of light, that one is owned by Miss Bloggs as well as company B. So for this one, we are again looking at two associated companies. So the implications of this, based on our 19% tax threshold up to 50,000, our marginal rate in the middle, and our 250,000 before we get to 25%. These rates are all divided by the number of associated companies, which is 2. So that means our tax thresholds have reduced down to 25,000 and 125,000. So whatever these companies may be doing, if they go over these tax thresholds, they will pay the higher rates of tax before the other companies where they get the full tax threshold. As you can see, it doesn't matter who is involved. I could have John Smith or Sarah Taylor or any name I want in amongst this. The key question here is who is the controlling party, and depending on who is the controlling party, which is under common control of that person. So for example, here we've obviously got Miss Bloggs, who is the one who is taking control of the most companies. As you can see, just because they are not in a group doesn't mean that you are not going to be associated for tax purposes. And as you can see, there is some complications as well as some things that hopefully are quite obviously why they are under common control. If you want any other examples, then please do leave a comment and give us an idea of what other examples may be useful so you can be figuring out whether you are associated or not. Hopefully today you've understood what it means by saying under common control and how the associated company rules work, so you know whether your companies are connected, are associated or not. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.